the participants that they can post their queries on the chat box, and we'll try to take that up by the end of this session. Over to you, Nihar. Thank you
Right.
for joining.
Thank you, Palash. Thank you, everyone, for taking out time and being a part of this session which we're doing. I will take you all through the first Pune asset which we are launching on our platform, Strata. It's an office asset in Hinjewadi, and I will talk about that in my further slides. Once we're done with this, I will take you all through the financial model as well. Approximately, you can check what's the kind of investment amount will fetch you what kind of returns. And once we're done with that, happy to take on any questions and discuss anything else which you all might have. So this is an opportunity in Hinjewadi phase 1, where you can own 50,000 square feet of office space. It's a G+1 structure on a 2 acre, almost 2 acre land parcel. The entry yield is about 9.2%, which includes 0.8% top up, which we offer from our side in the first year. The total asset size, as I said, is 50,000 square feet, but the total value is about 34.7 crores, 34.75 crores to be precise. The tenant over here is one of the most leading auto component manufacturing company. It's a part of the Tata Group, Tata Autocomp Systems. And again, I will talk more about that in my further slides. Tata Autocomp is coming as a tenant for a period of 9 years, starting November this year, and they are coming in with a minimum lock-in of 6 years, and they can extend the lock-in by another 3 years, which means that they will be with us mostly for a period of 9 years, which means the lock-in is 6 plus 3 years side letter of lock-in which they will give us. So total lock-in could go up to all the way 9 years. Quickly, just taking back one step and discussing what the office market opportunity looks like in India now. In fact, 2 years back when COVID hit, people were not sure what's going to happen with the work from home scenario. But what we've seen in last 6 months to 12 months is that enough and more people are coming back to office, but in larger numbers. What we are seeing is that the rentals which we are receiving are at the same price at what they were earlier. But then apart from that, the lock-ins the lock-in period which the tenant is ready to commit is increasing, and they're ready to lock in for a much longer time. Also, the kind of spend which the tenants are doing in the fit outs and furniture is increasing, which itself shows that confidence these guys have on the business and the next 5 to 6 years. Currently, if we see, 50% of the office space market is being absorbed by the technology companies. Manufacturing and banking and finance takes about 20-23%. So that's the spread which we see currently in the absorption in the office markets. There have been some 3 or 4 major demand drivers or reason why people are going back to offices in big numbers. One is that the rent, if you look at in these kind of cities, which is Chennai, Pune, Bangalore, Hyderabad, is still under $1, which means today if you were to get an office space, you're getting it at 50, 60, 70 bucks. While in Mumbai, the office spaces in area like BKC where we are sitting is anywhere between 200 to 400. So that is very high and not so sustainable. Hence, we are seeing a lot of people, a lot of companies moving to cities like Pune, Chennai, Bangalore, Hyderabad, where they can have larger office spaces, they can have more employees, and at the same time, they get value out of their investment into these kind of office spaces. Quickly moving on to what location we are talking about. Obviously, Pune as a market, few of us would know if we are in Mumbai, Maharashtra, and all of that. Pune has been one of the vibrant cities and also known as the automobile and the IT hub of the Western India. As a city, Pune has about 84.3 million square feet of A grade office space. We're not talking about B grade or which is something in an unorganized sector. Average annual absorption has been very steady at more than 5 million square feet, and about 21.2 more million square feet is expected to come up in the next 1 to 2 years. Key growth factors of Pune have been that Pune as a city is circular. So unlike Mumbai, where you see a single line where the city is growing, Pune grows in various pockets and beds, which allows companies to establish themselves in either of the pockets and then grow over there. So that is something which is attracting a lot of people. A lot of millennials are going to Pune, considering the weather, the cost of living, the kind of crowd around, and value for money. So that is something which we also believe that Pune is a great market for us to invest in the next 2 to 3 years as well. Looking at Pune as a market, there are 5 or 6 business districts which have been established. We are currently in Hinjewadi, which is on the northwestern part of the city. Going deeper into the location, if you're traveling from Mumbai towards Pune, the after you end the expressway, this is the national highway, and just as you take the right inside towards Injewadi, we are right in phase one in the Rajiv Gandhi Infotech Park, which is one of the largest tech parks in Pune. We are just about 100 meters from the upcoming metro station and the bus station, which is already there, and about 10 odd kilometers from Pimpri railway station, and close to about 8 to 10 kilometers from the main highway, which connects you back to Bangalore on one side and Mumbai on the other side. Now, talking about tenants, this uh, area which we're talking about, or this particular micro market we're talking about, is completely populated and highly, rather densely populated with these kind of tenants who are, everyone knows Infosys, Wipro, Persistent, Birlasoft, Mindtree, Tata Technologies, Cognizant, Accenture, all these guys are around. The rents also, which we're talking about in the micro market, have been anywhere between 45 to 65. However, we've always at Strata believed that we should get the highest possible yield at the lowest possible rent which we are entering, and that's what has happened here as well. Our rents are about 49 rupees in the market, while the market has been consistently at around 50, 55 bucks, which allows us to get yearly escalation, and which is what we've got in this asset. We have a 4% escalation on the rents year on year for the next 9 years, and because of which the average capital value in the market is floating between 6 to 8 thousand rupees a square feet, while we've got it at somewhere around 6,400, 6,500 rupees a square feet again, which is on the lower side of the entire market range, which means that the capital appreciation which we are looking at when we exit in 3, 4, 5 years time is going to be substantially higher or better than the other assets which are acquired at a higher price. Quickly talking about what the asset is and who's the tenant. So as I said, this is a standalone land parcel of close to 2 acres, where 50,000 square feet of office space is already constructed. It's G+1 structure. The best part is that this is a freehold land and it's not a leasehold land with MIDC or any other government bodies. Now, freehold lands have a premium of their own. This particular plot also has a lot of unused FSI. The current FSI is about 2 over there, which means I can construct 1.5, 1.6 lakh square feet of office space, while the used FSI is only 50,000. So tomorrow, and in fact, we are already in discussion with Tata. They're saying that we might want to have an additional floor or a capacity for 400 of our other staff member coming and sitting. So if that was to happen, one more floor could be developed on the top of G+1, and that would mean more or increased rental yield for our existing investor who would invest in the current asset which we are talking about. This is the landscaping, layout, and all of that for the current facility. There's a complete refurbishment which is happening in terms of renovation and all of that. 10 to 11 crores are being spent by Tata on refurbishing and renovating the entire property of 50,000 square feet. This is going to be the design studio and the research studio for Tata Auto Components company. Now, Tata Auto Component has a 82-acre manufacturing facility in Chakan, which is not far away from our property. But then this works and fits very well for them, that this is going to be their design and research studio, where they will conceptualize stuff and all of that, and then it will go back to the manufacturing facility which is there in Chakan. These are the rendered images, and this is how it's going to be once it's completely ready in next 2 to 3 months time after the refurbishment and renovation. Talking about the tenant, obviously very strong group, part of the Tata group. It has offices or other manufacturing facilities in more than 51 cities, 51 manufacturing facilities in India. They have been exporting the auto components to more than 7 countries, 14,000 employees currently, and have been incorporated in 1995 and going strong since then. They cater to most of the Indian and foreign brands as far as commercial vehicles is concerned, passenger cars is concerned, and all of that. So they manufacture shift gears, clutch plates, batteries, chargers, seats, AC systems, all of that handles everything which is used in a vehicle is being worked upon by these guys. When you invest, it's important to understand that when the rent starts and what is the escalation which we are looking about. So this tenant has signed a 9-year lease with a lock-in of 6 years with a side letter of another three. So it's 6 plus 3 effectively. We're starting at a 49 rupee rent per month with an escalation of 4% per year, which means that the rents which you're getting right now in the first year will increase by 4% year on year. We're getting a security deposit of 1 crore, which equates to about 4 months rents. And this is the timeline for you to refer that. Let's say today when we are investing, we target to register this asset in mid of August. And once the registration is done, 1st September is when the rent starts. And obviously there is a escalation which goes on every year, and eventually the end date of the lease is October 31. This is just a indication of how the returns would look like. The lighter blue suggests the pure rental yield. The orange part, which is 0.8%, is the top up which we are offering in the first year as an appreciation or token of appreciation from our side, which takes your first year's return, gross return, to about 9.2. And then from 8.4, there is an appreciation or escalation of 4% every year on the rents. And there is an expected 6% appreciation on the capital part as well, owing to two or three reasons. One, we are acquiring this property at a slight discount to the market. Second, there is a substantial unused FSI which is there in the property, which if we might want to sell tomorrow, we might get premium for that. And third, the rent itself is lower in the market, so that also aligns to the appreciation which we're talking about. 34.75 crores is the total price, and this is the breakup. 32 crores is your gross price. Stamp duty registration is 7%. We are putting 7% only on the land price, which is 20 crores. So we're saving 7% stamp duty on the other 10, 11, 12 crores, which otherwise would have been levied. Legal fees and reserves are something which is at actuals. The reserves will be paid back to our investors at the exit if at all it's not utilized. This is an indicative return sheet. I will share the Excel as well with all of you. That 25 lakhs being the investment amount. What is it that you take home year on year after all the deductions? So obviously there's the rental income, there's a pre-booking offer or the top up which we're talking about. Security deposit of 1 crore, which we're getting 98 lakhs, that will be placed in bank as an FD. And whatever interest we get on actuals will be distributed to our investors. Property tax and insurance is something again which is at actuals, which will be deducted. And then management fee is 1% of the original investment amount which we charge. So that remains constant. At a 6%, we're looking at 13% kind of an IRR. According to me, we should be doing slightly better if we take, and this is at 9 years exit right now. If we look at the same 6% cap rate with a 13% IRR, and if we exit in third year, 3 to 4 years time, we're hitting 13.7, 13.8. So according to me, that should be the exit strategy, where we're looking at exiting anytime between the third to the fourth year. So that is what we feel. Three or four very strong points why you as an investor should participate in this asset. One, obviously unused FSI. Second, the tenant is excellent, Tata Autocomp, and you can go through the website as well. Can't go wrong on that. Very favorable lock-in and lease terms with escalation on year-on-year basis. And apart from that, the location is also very strategic, very close to the metro and the other connectivity parts as well for the city. This remains same. 25 lakhs is a minimum investment amount. 1% is a management fee for any investor who's investing up to 1 crore. The minute you cross 1 crore of investments, either individually or in the family, the management fee for all your future assets goes down to 90 bips, and then it goes down to 80 and 70 bips if you cross 3 and 5 crores respectively. That's our loyalty program called Strata Blue, and you will have that on your dashboard as well when you decide to invest and get an access to the dashboard. So rental top up in the first year, we're paying about 0.8%, and our performance fee remains same at 20% over a 10% hurdle rate, which means if you as an investor are investing with us and when you exit, the net return which you should get is 10%, which means after the management fees, which means before management fees 11. So let's say 10% is what you get, and anything beyond 10%, we take a profit share in that. So just for an example, if you make 13% returns year on year, out of the 13, first 10 is anyways yours. We don't charge anything on that. On the balance 3, beyond 10, the balance 3, we do a 20% split with you. So 0.6 comes to us and 11.4 goes to you. So 12.4 goes to you. So that is how the split works, which means that if you as an investor make enough and more money, only then we start making money on our investment which we've done. Now, every investment has a certain degree of risk. Even a fixed deposit has a certain degree of risk. Only 1 lakh is insured by the government. Everything else is at risk. But apart from that, it's important to understand that how, as an asset management company, we have mitigated these risks, and we do that for all our assets. So capital risk obviously is very low because you're buying an actual asset which has a certain value to it. We obviously have a valuation report as well. But then apart from that, you're not putting into something which is virtual. You're actually buying an asset which is in brick and mortar and which has value. Liquidity risk. Yes, liquidity is not overnight liquidity because you're not investing in stock markets, but there is definitely liquidity possible over here in secondary market on our resale platform. We have more than 34 investors who've got exits within 30 days of them wishing to exit this investment. Having said that, we tell our investors to come in with a minimum 3 to 5 year horizon, because if you're investing in an asset class like real estate, you need to give time for one, the rent to go up, which is escalation, and secondly, the capital appreciation or the capital gain also to kick in, which means your property should appreciate, which does not happen overnight. But having said that, I think the valuation reports which we've shared for all our past assets shows a very handsome and a decent increase in the appreciated prices. And in probably next 1 or 2 quarters, we will look at exiting 1 or 2 of our earlier assets as well, which will complete the whole cycle. Tenancy risk is something which always exists if you're buying an asset, whether you buy a residential asset and put it on lease to a family, or you buy an office asset and put it on lease to a company. But the good part is that when you put it on lease to a company like what we're doing, the lock-ins are more. The tenant is here for a longish tenure. He does not move out at least minimum before 6 years. If he wishes to move out anytime after 6 years, he needs to give us a 6 months notice. And then we know that the vacancy in the micro market is less than 5%, which makes it even more easier for me to get a similar kind of a tenant, which is a AAA grade kind of a tenant. And that is something which is our responsibility as Strata to get the tenant replaced for you. And obviously, this tenant who's on our property will not move out because the rent is higher, because that's not the case. The rent is lower, and if he goes anywhere in the market, he is not going to get a rent which is lower than us. So the replacement cost for the tenant is much higher than what he already has with us. And secondly, obviously, we do due diligence of what the tenant does, what the company does, and this is a no-brainer in terms of what they do and what part of, as in what conglomerate they are a part of. So that's that. Apart from that, quick snapshot on what we've done. We've been in the business for slightly more than 2.5 years now. We've garnered an AUM of 650 crores, managing about 26 lakh square feet at this point of time across Jaipur, Mumbai, Bangalore, Hosur, Chennai, Hyderabad. Hosur has been our industrial belt, and that's been one of the best projects we've done. Apart from that, we have offices in Hyderabad, Mumbai, Bangalore as well, and Chennai as well. So that's been a spread on our portfolio. This is our team, pretty experienced. Sudarshan and Priyanka, obviously co-founders. Sudarshan is lawyer by education. Priyanka was working with DE Shaw. She was the financial wizard or the analyst on DE Shaw and WeWork. And then I had investments. I was with Piramal earlier. Ankit heads our marketing. Smruti, Kamal, in fact, based out of Pune, heads our tech and engineering and IT. Pratik is a CA by profession, by education, and he heads our finance. And Saloni is our chief of strategy, worked with Aditya Birla Group earlier. So these are, the last three assets which we did, just a snippet. You can find more details on our website on the properties page. But the first retail asset which we did was in Chennai, West Side, again a Tata Group company, has taken this for a lease of 21 years. In fact, we have about 6 odd crores kind of space available even now. So if anyone wants to look at this, they can look at it because it's a 21-year lease which Westside has signed. Again, a single 14,500 square feet office space with 3 floors constructing on it, which is total 21,000 of space. Sorry, not office space, retail space. The previous opportunity to that we did was the Bangalore office opportunity, where this building was taken up by Puma, which is your leading global sports brand, and this is their head office in entire India. So that's something which we own. And then we did one warehousing facility in Hosur a couple of months back. As an investor, you would think that when I'm investing, what is it that I get and what is it that Strata manages? So yes, when you invest, this is the most easiest platform for you to identify a deal and invest and eventually track your investments. When you come on to Strata, you do not have to worry about the due diligence. We do all of that, get the asset on the platform, on the table, after doing all the due diligence, which is whether it's the land or regarding the land parcel or regarding the tenant or regarding any other technical or financial due diligence which would have to do. So once that is done, and once the asset is registered, we manage the asset and we manage the tenant, upkeep of the asset, maintenance, collection of rents, passing it on to our investors, filing GST. All of that is something which we do. Eventually, selling the asset and getting a replacement of the tenant is also our responsibility. So that is something which we take care of. And at our end, we have our dedicated investment manager who helps you with any requirement which you might have during the investment process or even after investing. And then obviously we have an online dashboard which is very interactive per se and gives you every possible detail when you invest with us. And apart from that, any tech help on the taxation form 26AS, TDS, all of that is provided by us. So when you invest, you get access to investor dashboard, which actually shows what's the investment you've done, what's the kind of investment returns you've got month on month, the receipts of those investment, actually the legal due diligence which we've done. You can see all the property pages, all the property documents in terms of legal due diligence which we've conducted, whether it's the title certificate, if there is any mortgage, so the mortgage settlement deed, every possible thing, right from insurance receipts to property tax receipts to TDS certificates, everything is available for you online. As a company, we have three or four investors, marquee institutional investors who trusted us and who own a certain stake in Strata. So Kotak and Gruhas have 10% each in Strata. So Kotak owns 10% of my company, and Gruhas also owns 10% of my company. Gruhas is a prop tech arm of Zerodha, which is so Gruhas is owned by Nikhil Kamath and Abhijit Pai. So yeah, that's that. And Elevation and Mayfield are two very prominent private equity companies based out of Asia and US. Elevation is also invested with Swiggy, National Stock Exchange, Book My Show, Paytm, Just Dial, all of that. And Mayfield obviously has invested in Simply Learn, Licious, Amagi, and all that. All our properties have universal trusteeship services as the custodian. We also appoint Vistra as a trustee in most of our properties. We work with HDFC and ICICI Bank, who also work as our bankers and escrow account partners. Apart from that, Razorpay provides the virtual safe and secure fund transfer facility for us, and PropStack gives us the data intelligence as to what is the actual rate in the market in terms of as per the registration documents. So currently we have our offices in Mumbai, Bangalore. We are just opening up our office in Pune next week, and we are also opening up our office in Dubai in the coming month. So that's that. I will quickly take you all through the financial model, which we will share with you as well. So I have taken 1 crore as an investment amount just to understand the numbers in a simple way. 6% is the target appreciation which we look at. I have taken exit year as, let's say, 3 years. If at all you might want to stay longer, you can put anything between 1 to 9 years. But yeah, 3 years I've taken just for us to understand. So let's say if you invest now 1 crore, and this is the kind of breakup which you have, you get in an yield of about 13.5% if you're exiting at a 6% cap rate. When you go down, you can actually see month on month what is the kind of cash flows which will hit into your account before and after TDS. So 10% TDS is deducted on the investments or the returns which are transferred to you. So yeah, that's that from my side. Happy to take on any questions which you all might have. But just one disclaimer that there's been super demand on this asset, and as we speak, we are almost 98-99% funded on this. I will not be surprised that in the next 1 or 2 hours we would have this opportunity completely closed and going on waitlist. But if you'll still have any questions, happy to answer. We are also coming out with one more asset in next week, which is also an office asset with one of the pharma companies. It could be in Chennai, but a very sweet deal owned by one of the private equity companies. So we will talk about that later. But any questions pertaining to our structure, our company, the current asset, happy to take on.
Can you explain what is the exact exit process? Like if I want to, for some reason, exit the investment, then what will be the way to do it?
So, Nandesh, thank you for asking this because this is one of the important things which you as an investor should know. So, there are two or three ways how you can exit, right? One, and the best way is that we would advise you to stick on till the time the asset is sold, which generally happens between the third to the fifth year. That is what we understand. But if at all there is any contingency and if you wish to exit, the lock in for you as an investor is only 6 months. After 6 months, you can exit at any point of time, but there is an exit load of 1% up to 1 year. So ideally, anytime after 1 year, you can exit either in the secondary market or an offline market where there are enough and more buyers, or you can reach out to us and say, hey, listen, I want to exit, and we would have a wait list of every asset which is created where investors will come in and pick up your stake. So it's a 25 to 30-day process, but you can get an exit either on the secondary platform or you can get it on the resale platform which we have internally. And at the same time, you can wish to stay invested till the time we exit the property at any given point of time after the second, third, fourth year. But just one fact on the taxation bit: if you stick around for at least 2 years, you will be able to take the benefit of long-term capital gain tax, where the taxation is only 20% with an indexation benefit. So any exit before 24 months, you will be, attracting a short-term capital gain tax, which you might want to avoid unless there is dire emergency.
Got it. Thank you. Just one more question. The what any difference for NRIs, or it's the same treatment?
So for NRIs, we have in fact 22% of our investors are NRIs based out of various countries. What we've done is obviously we're accepting money from NRE as well, but the returns which we are transferring is back into the NRO. So that is something which we do. So, but we are happy to take money from either the NRI or the NRE or the NRO account.
Got it. Thank you.
Right. Any other questions, Palash, Ashish, Priyansh, anyone?
Yeah, so I would request everyone, if they have any query, they can either post it on a chat and ask them over here as well. We would be happy to assist that.
Sure. Great. I think so. Thank you guys for the patience and happy to connect at any given point of time for any other questions which you might have.
Uh, sure, Neha. I think like another query, like the last one. Can you also explain in and around at what rate this property has been acquired? What is the acquisition rate in the Hinjewadi wherein we are acquiring this property? This
Correct.
is this is more on a capital appreciation part.
Correct. So the market floats between 6 to 8,000 rupees a square feet. I'm talking about between phase one and phase two. We've acquired this at a blended cost of about 6,400 rupees. Now, if you were to look at what rate did we get the land, then typically our land acquisition has been at a 18% discount to the market. We've got it about 2,600 bucks as compared to the 3,200, 3,300 rupees per square feet rate in the market. So there is again a substantial discount where, which is why we feel that on a conservative side, at least 6% is something which we should expect on the capital appreciation. If the metro and all of that is ready by the time we are looking at exiting, obviously that will help us to bump the capital appreciation even further.
Yeah, sure, Neha. That would be great. Mm, any queries from anyone else? Like, I'll be happy to answer those. If, well, you all can also reach out to your respective RMs. Our team will also reach out to you in case you need any assistance over financial modeling part, or on or on any of the numbers which is presented. Sure. Thanks. Thanks, yeah. Thanks for the call. Thanks for the webinar.